Okay, so to kick us off, what's your name, job title, and job description?
Yeah, my name is John Bollinger. I'm a mortgage loan officer with Ruoff Mortgage, and the job description is mortgage origination, getting you from application to, closing on your home. So,
Awesome, awesome. How long have you been doing that?
I've been in the industry for over a decade, but I've been doing mortgage loans for 3 years now, as of April.
Okay, sweet. That's like pretty exciting.
Yeah, it just hit 3 years, so
Nice, nice. Congratulations.
thank you.
So walk us through kind of your trajectory. So you've been in it for almost a decade. How did you start to get to where you are now?
Yeah, I started by not meaning to get into the industry. Just throwing your application around everywhere when you're younger, when you're, a teenager, just trying to figure out what you're going to do. Kind of stumbled into it due to I was working a bunch of jobs and just didn't like them and just wanted something that paid me enough money to kind of survive. And my girlfriend at the time, now my wife, her sister was in HR at Ruoff and was like, "Hey, you should apply here and see if you can get in." And she ended up helping us both get in, which got us both into the industry. So definitely wasn't on purpose, but it's been very fruitful ever since.
Nice. So how long did you work at your first position at Ruoff?
Yeah, I mean, I worked in all sorts of positions. I started with post-closing documents, so I was just literally scanning papers,
Yeah.
uploading documents into a portal, just busy work, really, just all sorts of random jobs I've had with Ruoff leading up to where I'm at now. So I was doing that. I worked in marketing and public relations for a while. I managed a very small team for a very hot second, like kind of whatever, just did whatever I was told and just wanted to learn as much as I could. So it's definitely helped me as a loan officer as well to have worked on the operations side and seen kind of the nitty gritty of it all and kind of the behind the scenes of everything too. It gives you a bigger perspective when you come from that background going into sales though.
Makes a lot of sense. Seems like you have a pretty holistic perspective
Yeah.
of kind of the whole journey.
Seen some stuff.
Yeah, I am sure you have. Okay, nice. So walk us through. So if I were to shout at you for a day, what would we be doing for 8 hours?
Sitting at a computer, being on the phone,
Yeah.
nothing super interesting, but no, every single day, honestly, is a bit different. It could be, hey, I have a 9 o'clock, coffee, or it could be, hey, I'm going to be at the office early, or it really kind of depends. And that's kind of the fun of it all is you really don't know what each day is going to hold. Clearly there's a calendar and a schedule, but sometimes, it's kind of an unpredictable day where, the goal is to get as many emails and as many texts and as many calls in, as much follow up as you can. But, it's kind of, if you were to shadow me, you'd be surprised if you shadow me on Monday versus, a Thursday or a Friday. Like we could be doing a lot of calls, or we could be, at events. We could be at a golf outing. We could be doing all sorts of different stuff. So it kind of depends, honestly.
Okay, nice. So it sounds like a lot of freedom and a lot of flexibility.
Yeah. I mean, it sounds like it. It definitely sounds like a lot of freedom and flexibility, but you're very much always on, if that makes sense, where I could be at a golf outing for a couple hours throughout the day, networking and meeting some new people, or maybe catching up with some people you already know. But later that night, you're probably going to be on your phone or your laptop the entire night trying to catch up from the couple hours you were there. So the freedom aspect is really cool, but it's also like there's so much behind the scenes work that you do, whether it's late at night or if it's you wake up super early to, finish a file or finish, a pre-approval, or your days are kind of just every single day of the week. So there's no real like work schedule, but it's a lot of fun.
Yeah,
For sure.
That's really cool. So as you're working with clients, obviously like a real estate agent as, hey, here I have this first time home buyer that's wanting to buy a house. And then the first step for that is the pre-approval.
Yeah.
So can you walk us through the process of, okay, Jimmy John wants to buy a house. He's not pre-approved yet we just closed. Can you walk us through kind of the journey of that?
Absolutely.
And like what you do for that client?
Sure. Yeah. I mean, Jimmy John.
Mhm.
Shout out to the sandwich company. Very good sandwiches.
Quality spot.
Yeah. But say Jimmy John comes in and applies today, right? I'm going to need to be collecting, W-2s, pay stubs, bank statements, just doing all of the, financial background work to make sure that they will qualify. And honestly, from there, if we see, they have good credit, have a good history of paying their bills and they have money, or maybe they need down payment assistance, or they're using a first time, home buyer program, we kind of fit them and like put them into the perfect program that works for them to get to that house, get to their closing. So yeah, I mean, the whole process in reality is just get them application pre-approved and then send them back to the real estate agent. From there, you can go look at houses, put offers in. After that, you go into, the processing phase and the underwriting phase and appraisals and inspections, which clearly I'm going to be there to walk them through that the whole way. It does sound a little daunting, but at the same time, if you have somebody in your corner, it's pretty easy front to back. But yeah, after appraisals, inspections are clear and underwriting's done, you just go to the closing table from there, and the title company takes care of you, and you sign your docs and you get your keys. So
nice. Awesome.
Easier said than done, but yeah.
yeah. A lot of nuance in that, a lot of
Sure.
little things and little different avenues you have to take depending on the situation.
Yeah, certain underwriting conditions could come up,
Yeah.
Disclaimer.
Yeah. A lot of surprises, I'm sure.
Yeah, there's every file is a little bit unique. At the end of the day, every client's a little bit different, and every file is going to have its little nuances or its little things, but at the end of the day, it's a learning experience with, pretty much every client. I've learned something new, and it's awesome. The more clients that come in, the more I learn, and the more, the real estate agent can learn too, and it's just a lot of fun.
Yeah, a lot of just hanging out with people and help them on their journey.
Yeah, it sounds super not stressful, but sometimes,
Sometimes at 10 o'clock when you're trying to get 10 o'clock PM, trying to get contracts signed and make sure everything looks right.
It sounds super easy and chill until you're like, oh wow, I'm getting close to a deadline, or but yeah, no, it's definitely fun.
Yeah.
But yeah, I wouldn't trade it for the world.
Yeah, that's awesome. So walk us through kind of the educational bit, because I know for certain financial positions, whether that's like a wealth manager or an accountant, like there are very clear set guidelines for like education and like getting tested and approved. So walk us through, like, in order to do what you do, what kind of background do you need education wise? So
education wise, the entry is pretty chill and pretty laid back, to be honest. You do have to take a licensing test. It's kind of similar to the real estate test, but it's geared towards the mortgage side. It's like 125 questions. You have to get, I believe, a 75% to pass. So the entry is pretty mellow. Mm-hmm. And honestly, you could probably be just barely out of high school and go take the test. Some companies, you can join them and say, hey, I want to take this test. Say you go to ABC Mortgage and they're like, hey, I'll pay for you to take this test if you want to originate here. Sometimes you have to pay for it on your own, depending on the company that you want to work for. But honestly, it's really not that difficult to get into. The difficult part is creating the business and sticking to it and constantly keeping up with, follow up and, keeping your pipeline full and keeping the leads coming in. So to answer your question, the entry is not super hard.
Yeah, that's really good to know. Because I always so one of my buddies is a financial advisor. He's actually my financial advisor. And he had to take like all of these tests, and like it was a super rigorous process. So it's interesting to know that like kind of to originate loans, kind of work in that field, like there's initial low barrier to entry. I know like once you get into it, there are a lot of things and learning opportunities that you have to wade your way through.
So you can't really originate a whole loan. Say that you take the test and you pass the first try, and then you're just like not thrown to the wolves, but you're gonna go do your first loan, right? Mm-hmm. You're gonna have to have taken a lot of like testing to get to that point. There's 40-hour courses you have to take that come with the testing, right? Like you have to study and actually know the stuff before you can actually really go do it. But I mean, some people, not me, didn't really pay attention to that 40-hour course. So.
Yeah.
But yeah, the Versa, like a financial advisor, I know that they have to do a lot of strenuous stuff to get to where they're at. And like, I believe insurance is kind of hard too, isn't it?
Yeah, I think so. Yeah.
Yeah. I feel like this is maybe a little bit easier than that, for sure.
Nice. So I haven't gone through like a real estate agent's like career in that path yet, but as a realtor, like I kind of know the path. So it sounds like you get is it a license that you technically hold, or is it just kind of like
Yes.
okay. So you hold your license, and then I know as a realtor, you're kind of just on your own thing. You have to go find a brokerage to hold your license. Is it similar with lending, or do you kind of have to work with a company?
So yeah, with lending, you have to work for a company. I think they're called sponsors, I guess. So they will hold on to your licensing and it stays in your name and you just originate under them. But they pay you directly.
Okay.
So like with real estate, you get closed, the day that you close, you get your check cut to you. For us, it has to go back to the mortgage company and then we wait at least, 2 weeks before we get paid on that. It gets pushed through to them and they do all the, final documents and post-closing documents and things before we get fully paid through them.
Okay. Gotcha. Interesting. So when it comes to finding a lender or mortgage company, like what would be a good way to find a good, sustainable, more like lender to work underneath or work with?
Yeah, to work with, I would look for somebody who already has a team. So like here at Ruoff, there's a guy named Nick Staker and he has a pretty big team. I'm sure you've heard of him.
Yep, I have. Yep.
Yeah, he's a cool guy. So I think if you wanted to get into it, that'd be a really smart move. I did not do that. I just went fully in on myself. And it had its ups and downs for sure. But I think if you were to find if you wanted to get into this industry, you just Google, mortgage teams or somebody like near you. I'm sure you can chat GPT it too, but find a team and call on them. Just say, hey, I think this would be really cool. They might have an opening. They might not, but I mean, that's sales in general. There might not be an opening anywhere you look. So try to find a good team, especially a reputable one. Like look at, experience.com or look at, their Google pages and make sure it's not like you're joining a slumlord team or something, because there are out there, but definitely look for reputable teams to join.
Oh yeah, true. What would be an example of kind of like a slumlord or like a poor lender to work for?
Can I not answer that question?
I mean, hey,
you got to just look at reviews, honestly, because the reviews don't lie at the end of the day. And if you see a bunch of 1 stars or 2 stars, that's kind of just the telltale sign, I guess, of hey, maybe I shouldn't go and start my career somewhere where there's poor reviews or where there's a bad if you get a bad vibe, it's probably not the spot for you. And a lot of mortgage companies too, especially bigger ones. There's really big mortgage companies that will hire people just because they hold a license. I'm not going to name drop any of them, but if you look on Indeed, say you just got your license, you're just out of high school or something, you can look on Indeed or whatever and just type in loan officer. You could shoot an application off and say, hey, I have, a license. They might just hire you on the spot too, because you already took the initiative to take the test and probably pay for it. That is a route. I don't fully suggest that depending on your market. It's okay. Here, in Indiana and Fort Wayne, everybody's a little bit more I want to work with a local company. So it's not the easiest entry if you go and join a huge giant company or we call them internet lenders where it's, kind of a call center. It's not going to be the easiest for you in a market like Fort Wayne's where it's very local heavy.
Interesting. Yeah. Huh. That's good to know. Good to be thinking about. So when it comes to, so you've got into it, you took your test, you're in a office now working with a team. What are some of the things that people don't necessarily understand right off the bat or just kind of misunderstand about the process?
Oh, there's so many things. So it depends. Most first-time home buyers, when they come here, or if they call me or, if they come in person, whatever it is, they don't usually know where to start in general. People that have bought homes before, they typically don't have a whole lot of questions. But yeah, I mean, first-time home buyers specifically, they usually have a lot of questions about the closing costs or the programs or kind of the nuances of how everything does work in general. How do we get from A to Z? And I think that's one of my favorite things is the education piece of it all. Of hey, yeah, the appraisal is to tell you what the value of the house is, or hey, this is how we got to these, closing cost numbers, or hey, this is a down payment assistance program that you qualify for. There's just so many things. There's so many moving pieces that go into this, and there's hundreds and hundreds of programs out there. So to answer your question, it's just very vast.
Mhm.
So
Kind of like just learning by doing.
yeah. Sometimes when you go on your own, like I did, it's kind of trial by fire because you're just like, hey, I have a license. I'm going to go and do this, but like, how do I do this? Yeah, I don't know.
Trial by fire. That's a great way to put it. Do you feel like sometimes that weeds people out from the industry?
Absolutely. It's tough. And you got to grind your teeth. You got to constantly be on. And some people don't want to be on, and that's not a bad thing. You know, maybe it's just not for them, or maybe the different career path is something they might look into. But at the same time, like, it's definitely weeded some people out. It's the best industry for me, but for, Jimmy John, for example, maybe, he's more of an IT guy, So it's definitely weeded people out, but at the end of the day, it's all about how many hours you want to physically put in. You could wake up at 5 a.m. and call nobody. You can, do whatever you want. You don't really have a set schedule. You could skip work for 4 days, and that only hurts you. So, yeah, it's weeded a lot of people out, but it is what it is, I guess.
Yeah. Very similar to real estate, where you get out what you put in.
Exactly.
You
Yeah.
reap what you sow heavily. Like, there's a lot of people that get into that industry and they think it's just, I'm going to make cash right off the bat, and that is not how it works.
No, it's not. I think real estate is heavier in that mindset where people are like, I saw, Selling Sunset, and they were like, yeah, I'm going to sell a bunch of houses. And then you get out there and they're like, oh, wait, hold up. This is not what I thought. Yeah. Similar to mortgages too, you kind of see like the TikTok videos or the Instagram videos of like, I made 6 figures at 19 years old because I, cold called 10,000 people a day. And it's like, you can do that. That is a choice.
Yeah.
But it's not for everybody, Yeah. And I'm personally not a cold caller. Like, it's not my vibe. I was kind of at first because I had to just, get out there. But now that I've built a bigger book of business, I don't really have to constantly cold call like I used to. Like, that was not fun.
Yeah. Could you walk us through kind of what steps you took when you first started? Because like it's choose your own adventure. So like, how did you wade through that adventure in the beginning?
I wish I could go back and change a ton of stuff on it, to be honest with you. Yeah. I think for me, I went into it pretty confident. I was just like, I think I can just do this. I just bet on myself, right? And step one was, I was that delusional person, right? I was like, dude, I saw this video. Like, this guy made 6 figures, man. Like, doing, like, I'm more of a bigger personality than that guy, right? Like, I can do that. And what I found was I kept comparing myself to these people that were doing really well. And then I jumped in head first and I was like, holy crap, dude. I don't know what I just did. Like, I think my son he was 3 at the time when I started. And I was like, I'm just going to do this to build a better life for him and my wife and all our family. And it took me months before I was like starting to actually have it click. And I didn't make any money. I think I made like my first 4 months, I think I made like $800. And I was like, dang, do I go back and do something else like a corporate job, or do I just go do a 9 to 5 again? And then I think what really switched it all for me was, social media, one, just getting heavier on that and getting the presence out there and just networking in general, just getting out of my own way. Because for a long time I was in my head. I was just like, hey, this dude's doing super well on social media. This person's doing well. This person's doing well. Why am I not? And comparison is the thief of joy at the end of the day. And I started really breaking out when I got out of my own way. So I changed a bunch of stuff, but I'm very grateful to be where I'm at right now. Yeah, for sure.
It's one of those things where it's like, you don't know what you don't know.
Sure.
Like, if you never take risks, you never learn anything.
No risk, no reward, or whatever the influencers say.
Yeah. Whatever the TikTokers say. So you had mentioned how when you had first started, your son was what, 3?
Yeah, he was like almost 3, I believe.
Okay. So what was that like? So like, obviously you're wading into this very unpredictable industry and job. Like, what kind of support system did you have when starting this? And like, how would you recommend building something to help support you during that?
Yeah. So for me, it's all my wife. And, we very much prepared for me to jump into it. we had our finances at least solid enough, and we had our, our mortgage was paid down pretty low at the time. We didn't really have much debt besides, we had like one credit card, and my car payment was pretty cheap. So we were like, hey, listen, we're in a financial spot where her income could probably cover most things. Not all of it, but enough to, if I didn't close that single deal in 6 months, then we were going to just go back to just me be fully corporate again and just, go back to the suit and tie of it all. So, I would say betting on yourself, be smart about it. If you have $0 in your bank account right now, and you have a child that's maybe 3 or below, or say you have a child that's 10, I don't know. If you have mouths to feed and you have no money, do not jump headfirst into this is my biggest advice, because it will take time. And if you don't get paid for 6 months or 4 months or however long it took me to make a very small amount of money at first, it's hard on your marriage, it's hard on your family, it's hard on you, and you're going to be in a competitive environment, and you're going to potentially compare yourself, and you're going to kind of beat yourself up. I would say to smartly do it. Have at least, a couple months cushion. Like if you're fully like 100% all in, make sure you have something to fall back on a little bit. So don't just quit your job and jump into it.
Yeah.
Maybe keep the job that you have and, get your license and maybe do 2 things at once. I see people do it all the time with real estate. I see people do it, in the mortgage side, just to get your footing down. I mean, I have friends that I won't name drop, but, working at Walmart, 3rd shift, waking up, working on loans, just to kind of get by. I've seen people DoorDash and Uber drive until they could get their footing. And now there's a lady out of Cincinnati that I know. She was, I believe it was Panera. She was driving for them. And then also like, I don't know if this is legal, but she was leaving her business cards with people she was dropping stuff off to, and she was calling people every day, and she was just grinding. And she's one of the biggest producers out of that area now. And there's no shame in the game. If you have another job and you got to make ends meet, do whatever you got to do to make sure that you don't fail at it.
So it sounds like you need a good runway in order to kind of really take off and like something like this. Like most people, like especially 9-to-5s, they have that initial interview. They get hired, they start the next day. Whereas something like this, it sounds like you need a long stretch to be able to like lift you up till you support yourself long term.
Yeah, sure. I mean, it's different for everybody. Like, because my journey is going to be different than Jimmy John's.
Yeah.
Yep.
So
whoever down the street could probably go and maybe get a loan started tomorrow. It's different for every single person in every personality type. So I'm saying some of these things and giving some of this advice is just like this is what I would do. But there's some people, like I have friends that jumped into it head first that immediately started crushing it out the gate. So there's those anomalies, right? But if you look at the numbers and you look at the statistics, the average person who head dives into it with no fallback, that goes all in, it's a pretty low, number of people that come out on the other side that are very successful.
What would you say is like with that, like the average tenure of somebody who gets into this position and then exit it?
Oh man, that's a tough one. Honestly, a lot of people will do, and this is not a bad route by any means, but a lot of people will go to a bank and have like the walk-ins come in and, get leads that way. And I see a lot of loan officers that come into it ready to just rock and roll, right? And then sometimes they end up at a bank where there's like walk-ins and stuff. I'd say a lot of people stay in the industry to be real with you, but they might do different jobs, right? Maybe the loan officer path wasn't for them, but they end up, in post-closing or in processing or in underwriting, or maybe they end up in title, right? So like my wife, she started in the mortgage industry with me as well. And she's now a title rep for Near North Title here in town. So I think most people that do join end up finding a career that's kind of at least similar, but the loan officer specific here locally, I think a lot of people that did jump in headfirst are doing a pretty good job. Like there's a lot of people that jumped in around the same time I did that are still doing it, but you see it at the level of different states, right? Like I have some friends in Atlanta that jumped into it headfirst and they quit like 2 months in, and globally the people that jump in head first, the numbers are pretty high of the people that get kind of turned over with that. So don't have a fully direct answer, but locally here, there's a lot of people that jumped in and they're doing extremely well.
Yeah, I think even though there's no like year boundaries of that, because like in real estate, it's 2 years, like people start and then 2 years. But I think what I found interesting about what you said is like, it sounds like it can kind of evolve into a different path. Just because like it starts out looking one way, like there are other opportunities for you to build something in a different avenue.
Sure.
And that's like pretty cool because not a lot of, especially like real estate like that, there's no other, and with your real estate license, there's very narrow wiggle room for you to develop something.
Yeah, it's kind of, I feel like, and I'm not an expert, but I feel like that's maybe kind of one-sided, where like, hey, I'm a real estate agent.
Yeah.
But I've seen it too, where some real estate agents become, like admins, or they do, they help with, photography or stuff. Like, I feel like this sounds a little culty, but everybody that joins the industry as a whole kind of stays near it, right?
Yeah.
So maybe you go work for a photographer that does real estate photography, or you join a team, or, help people with random things. Like, you kind of end up around the same kind of people, I guess.
Yeah. Interesting. Very cool. So let's go like kind of more into the day to day. What would you say is kind of the hardest part of your job that doesn't always necessarily show up in the job description?
Yeah, I think the hardest part is knowing when to turn it off, I would say, because you're so inclined to constantly be worried about your clients and constantly be on go. And I have a meeting here, I have an event there, I have all this stuff I have to do on top of staying on top of files and staying on top of clients and follow up, and you're kind of needed in every direction. And my hardest thing, I guess, is just knowing when to shut the laptop, kind of turn the phone off for a sec and kind of just relax. And I think that's probably most loan officers in general. Like, our personality types are very go, 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 go. So I would say just turning it off is the hardest part.
No, that's really good. I feel like in some like industries where it's more of a you eat what you kill on your own time, wide flexibility, that's always the hardest part, because you're just constantly going and thinking about the next, and like, okay, like what's next month look like, and kind of just enjoying where your feet are after work is kind of a difficult thing to navigate.
You're always thinking about the future, and you're always constantly on go. I've gotten a little bit better with it this year, but when I first started, like year one, I don't think I turned my phone off once. I don't think I did a do not disturb. Like, I do that now, here and there, because I got to have some sort of like mental clarity. But at first, I don't think my first year, I wasn't sleeping. I was very much just like, I got to call this person. I got to do this every second of every day, or I'm not going to be successful. And what I realized is I was grinding my gears nonstop and kind of not going anywhere with it, because I was burning myself out. My first year, I was killing myself trying to get anybody to, I'm like, hey dude, I'm a mortgage loan officer, like, use me. Like, all I did was just like kind of ask for business. And when I started building good relationships with people and started building, a good client base where they're, the word of mouth started spreading like crazy, middle of probably my second year, it just started taking off out of nowhere. And I think now that I've kind of got used to the craziness, it is a little easier to turn it off. But at first, it's definitely not. And I think anybody jumping headfirst into it, you kind of have to be on go. It is very hard to turn it off when you're just hustling, trying to get any sort of business.
Do you think that's, you maybe hinted at it earlier, but do you think that's necessary in order to succeed in this field? That year of just not turning it off? Or do you think there's a sustainable way to start it?
I think there's no rules to it, to be honest. I see people that are the most mellow people on the planet that don't feel the pressure of having it turned on all the time, or this is just normal for them. But I see people that are frantic all the time, that are like, if I don't call this person this second, like, I'm going to lose this deal, blah, blah, like, they freak out. So there's so many different personality types, and there's no one way to do it properly. But I think when you're starting, I would personally say you got to be on, just because you're kind of fighting, especially when you're new. you're maybe the new face in town, and you really need to do the best you can, and you have to constantly be in communication. You have to pick up where people have kind of maybe dropped the ball. Your first year, at least for me, I'm sure there's other loan officers and people that have felt this. Your first year, you're kind of picking up the scraps of maybe somebody who couldn't qualify someone, like, hey, XYZ mortgage company couldn't qualify this person. Can you? So you're really just grinding your teeth. And the reason you're kind of always on go your first year is because you're working with maybe some harder files and maybe some harder things. You're trying to impress people, show what you got. You know, you have an at-bat, now hit a home run. And I think now that I've hit year 3, I don't have to do that as much. I still do it, you know, when I have the opportunity to, but I don't try to go after it now. When you're starting, you kind of have to go after anything, any sort of at-bat.
Wow. That's really interesting to think about. Because I think a lot of times people don't necessarily know what sacrifices or need to be done to succeed. Like kind of one way I think about it is like, am I willing to make this sacrifice to be successful in this field? That's something I think in some of these industries like lending or real estate or whatever else, it's more of a choose your own adventure. Is like you have to know what areas of your life you're going to have to give up in order to gain in others.
Sure. I think the most important thing to remember is, at least for me, your family has to come first. Because I've seen people in the past where there's just, they'll give up every single thing in their life to be successful. They don't care what they have to cut off to just get to the top. And I would say, as long as, you know, you have a happy family and you know, go home to just not stress every single day, then you're doing something really well. Whether you're making, you know, 6 figures or if you're making, you know, as long as you're surviving, I guess. That's the most important thing. So to go to what you just said, cutting things out, be smart with what you cut out to get to where you want to go. Don't just cut everything out of the way to get to the top, because you're going to burn every bridge and you're going to come back down way harder than you did going up.
Yeah. We had talked about this a little bit before, like because this isn't eat what you kill, like choose your own adventure. The money structure looks a little bit different than a 9-to-5.
Yeah, you could say that.
So can you walk us through like what that actually looks like practically? Like how does getting at the end of the day, getting paid look like?
Sure. So I guess to put it into perspective, we make a commission off of the home being closed. So say that you buy a house for, you know, $200,000, we'd make 1% of that typically, when it's all said and done, and then taxes get pulled out of it. But say you buy a house for $200,000, you make 1%, you make $2,000 to keep the math kind of simple. On the mortgage side, some companies pay you a week after closing, 2 weeks after closing. Some companies pay you once a month. It kind of just depends on where you land or where you want to go. But yeah, if you close, you know, a couple loans like that, you're making more money than you maybe were at your corporate job. But yeah, like you alluded to, you're always looking at the next month, right? So say that you close 4 of those and you're making some pretty good money. So you close 5, 6, 7 of them, you're making really, really, really good money, especially if you're just getting out of high school. So there's nothing but room for opportunity, and there's really no ceiling to it. You can make as much as you want or as little as you want. So it's kind of the ball's always in your court every single month.
And you said that the company pays you. So can you walk me through, like, so I know like for real estate, you get paid by most of the time the seller. If you're on the buying side, the seller pays you out of the net proceeds of the house.
Correct.
Like how does the money trickle down to you after closing?
Yeah, sure. So it's a little complex. Basically, when you close the loan, right, the mortgage has been originated. And then in the secondary markets, so investors will come and basically buy that loan from you. So the mortgage company gets paid when the investors take on the loan, and then you get a portion of what the mortgage company makes. So let's say it's that 1%, right, that you make on the commission, that gets cut from when the home is sold in the secondary market.
Okay. And does that change at all if you're like on a team? Like, does the money structure change? Yeah.
So certain teams, and again, I think every team's a little bit different. So there's usually agreements with like the team leader, say that there's, 5 people on the team. Usually if they pull in business, it goes into their team leader's name. Sometimes that's not the case. But I think they get paid probably a little bit less than what, they probably get paid like maybe 10% of it or 5. I don't really know how those all work. Um, my team I'm the only loan officer on my team. I do have a assistant and I have a processor that I work with. So they're on a salary. I don't have to really pay them except for bonuses on each loan that's closed. But yeah, every team has a little bit different of a structure, I would say.
Can you walk me through like how your workflow with your team works and kind of how you built that team up?
Sure. So my assistant and I really game plan every single morning. I think that's the biggest thing is making sure you're on the same page. So it kind of varies because like I said earlier, every file is a little bit different. So what we do is we have a front to back, like, hey, this is what we need for each file. Where are we at this every single day? So maybe we need, a homeowner's insurance quote, or we need, a closing disclosure to go out, or, we know that every single morning going into the day. We start with whether if it's a phone call or if I meet up with her in person at the office. The structure is really good because we're on the same page. And with my processing team too, like we definitely do like a pipeline review every week. I don't have to sit down with my processor every day because her job is way too stressful to sit down every day, I would say. But yeah, constantly structuring and constantly knowing where every single file is at in the mornings gets your day kicked off awesome, and it really keeps us all together.
Mm-hmm. And is that something like, is that a necessity? Like, do you need a processor? Like, do you need that team in order to be successful, or is that just something you found works best for you?
So don't quote me on this. I think you legally have to have a processor.
Okay.
Well, I know you have to have a processor on every file, but I don't think you have to have a specific one.
Mm-hmm.
I just do at this company. I think some of the bigger companies, they rotate through processors, and like you might not have the same one on every file. But for me, I have one, and it's always the same file. With an assistant, no. Like I didn't have an assistant until I came here. So I was doing everything myself. So kind of chasing after conditions and, making sure everything was in line all on my own. And where I started to really break out and do better is when I had somebody else helping me with the things that took a lot of time. So yes and no. I mean, there's certain people that they can grind through without an assistant. They can close, $2, $3, $4 million a month on their own. But I promise you, they're probably more tired than somebody who has an assistant. That's for sure.
Maybe not sustainable.
Yeah, it's definitely a different breed of person to be high functioning without a team around you.
And do you have plans to grow that team at all, or are you kind of just content with where you're at?
Currently, I mean, I'm in year 3. Like eventually, yeah, for sure. I want to know way more than I do now before I start pulling people underneath me. And I'm extremely intelligent. I've seen a lot of things. I've, closed a lot of loans, but at the same time, I want to make sure that, say I bring some kid that's, pretty new out of high school or something, or maybe a kid that's graduated college. Like I want to make sure that I'm the best mentor I can be before I start really, really trying to expand. So yeah, I just don't think in year 3, it's where I want to be yet. I just want to make sure I have everything completely mastered before I bring somebody under my wing.
Confidence. Well, you're confident in what you do, but
Correct.
in order to like pour that back into somebody, has to be a little bit more of a context there.
Yeah, and I think something for me is I just want to constantly keep growing myself too. And while that maybe sounds selfish, I also want to make sure that while I'm growing, if somebody was underneath me, I want to make sure that I'm not dragging them down, because I'm still like trying to get as high up as I can. Yeah. If you're grinding with yourself every single day, it's kind of hard when there's somebody else there that you're trying to mentor as well. So I think once I get to a place where I feel like, hey, I'm ready to maybe slow down a tiny bit, then yeah, I think that's when it would probably start.
Gotcha. And you mentioned like growing yourself. What are some ways that you kind of develop your skills and develop your knowledge base? Obviously, a lot of it is going to be learning by doing.
Yeah.
Was there anything specific or like programs or like resources that you use to grow?
Yeah. So it's all every file basically. So every file I kind of learn something different, and I constantly am trying to learn new guidelines. And that's something I didn't do when I started. When I started, I just wanted to get loans in the door. And now I'm like, I want to actually know the things that I'm talking about and say it with full blown confidence. Because I think when I first started, it was one of those, like I said, trial by fire. It's, hey, realtor, I don't know the answer to this. Let me go ask my manager. Can you please hold for a sec? I want to be, where there's never a question. It's always like, yes, I know this 100%, which right now, I don't really have an issue with that. But at the same time, like, I would just want to keep growing and knowing guidelines and knowing every single program in and out.
And how do those, can you walk me through, like, so you mentioned the guidelines, what is the entity that kind of is keeping everything accountable and in check? Like, do you have to report like some sort of commission? I don't know what the word is, but.
So the guidelines, there's different programs, right? So like FHA has their own set of guidelines, USDA, conventional VA, like it's basically just those programs specifically have different things that make them what they are. So for FHA, typically, there's guidelines on, repairs that maybe need to be done on the appraisal, or there's just random little intricacies on every single program that can come up, right? There's a billion moving pieces in every single file. And the last thing you want to do is not know what's going on or what that guideline could basically be. Like, you just don't want to miss anything. So for us, we have a thing called like the knowledge base, and what it is our higher ups, like our managers, and at the corporate level, if there's an update with conventional, or if there's an update with FHA, they'll put that in there and say, hey, updated guidelines, make sure you look at this. And I like to at least go in and read it to make sure that the next conventional file I do, if there's a change, I know that change is in place.
And do those guidelines change like annually, monthly, or is it kind of just?
It's a little sporadic.
Yeah.
It's an ever-changing industry, so you can never fully 100% remember every single thing, right? Like, I'd be lying to say, like, yeah, I know all the guidelines. I don't. But at the end of the day, I can find out if I don't know, because I have resources at my fingertips. But yeah, guidelines are changing all the time. Same with real estate. I mean, if you look at like the NAR settlement, that kind of shook things up. Like, that was a huge change for people. There's constantly things there's lots of moving parts. And so similar with the mortgage side, there's always something kind of changing.
Has there been any big change like in your 3 years of kind of like shaking the industry, kind of like the NAR settlement?
Not really, to be honest with you. The biggest thing for me, I think, when I jumped headfirst into this, the interest rate changing. So jumping in post-COVID, when rates are at a really tough spot, and grinding your teeth during that was probably the biggest change for me. Was like, wow, everybody's holding on to that 3% interest rate they have, and I'm now just jumping headfirst into an industry that's in a kind of inflated market, right? Like, where interest rates are in the 7s and everybody's holding out, and you're just like, hey guys, I'm here. Like, hey. Yeah. So with, guideline changes, not exactly, you kind of just roll with it. And whenever there's a change, you kind of just roll with it. The NAR settlement was way bigger, I would say, than anything we've had to deal with at least my 3 years of doing it.
Yeah. And so with the interest rate conversation, obviously people are very comfortable with their 3% interest rates.
Sure.
Don't really want to move, or maybe considering it. How do you, I guess question A is, how do you handle those conversations? And B, where do you learn how to handle those conversations?
I think it's just educating yourself. So like, usually people that have that 3% interest rate, they're sitting in a house maybe they don't like, or maybe they're sitting in a house that they love, right? So the people that have the 3% interest rates in a house they love, they'll never even talk to you anyway. So the people that I talk to that have those interest rates, the only reason they're even thinking about selling or, getting a new mortgage or refinancing is, one, they have to cash out some equity, hey, I need to, pull some of this money out of my loan. I'm in a desperate spot. Typically is where we'll see that conversation come up. Or, it kind of sucks, but sometimes there's a divorce, or you have to, upgrade because you're having more kids. You can't be in that small ranch style house with, 5 kids just because the rate's better. So it's usually not the most fun conversation because nobody wants to give up that 3%, even 2% rate, right? So you just navigate it as best as you can, really. Just say, hey, I know this kind of sucks, but rates are eventually going to come back down again. I can't promise it'll be 2. But I promise you that if you, upgrade to a newer house, you have enough equity to where, maybe your monthly payment could be similar. Maybe you can use some of that equity to buy the rate down more. It does suck, but at the same time, you're going to be much happier in a, house that fits your whole family. Or, if you pull out that equity and you pay off your vehicle, or you pay off something that's, student loans or medical debts or things like that, it might even be cheaper for you, even with a higher interest rate. You got to look at credit card debt too. Credit card debt, if you've looked at the numbers, like it's pretty up there, man. Like the interest rates are pretty high. Would you rather have, a bunch of credit cards with, 18, 20% interest rates? Maybe an exaggeration, right? But like you have a bunch of those. You could pull out some equity from your 3% interest rate, pay all that stuff off, and have less money you have to pay every month. And you're just paying, interest to one entity instead of, maybe 5, 6, 7 credit cards or your car or whatever it may be. So it's not always the easiest conversation to navigate, but at the same time, it's sometimes necessary, especially in like the divorce situations. Like those are never fun because now you have the, hey, my interest rate's great, but we're getting a divorce, or very high stress on everybody. And you're also talking about a rate that they don't want to give up. So you just navigate it person by person and pick, I guess, navigate it with grace every time and just do the best you can, really. I mean, there's no, I guess, one way to do it.
Yeah. Kind of conversational jiu-jitsu is what I kind of equate it to, because it's just always kind of moving and like trying to see the needs of the people, and then also like finding products or services that fit those needs and being graceful with them in the middle of that is a good way to
yeah, you got to be calm while they're not. At the end of the day, if you're jittery when you talk to them about that, they're not going to want to use you. And I mean, it's always a tough one to navigate, but at the end of the day, as long as you do everything to the best of your ability, they'll probably stick around and use you. It's just not the most fun conversations.
Yeah, but sometimes often necessary.
Yeah, the necessary evil of it all.
Yeah. So in that, I kind of see like you're working with those clients and having those hard conversations and walking them through the varying aspects of it all. So like, what does it look like to have a good experience with the client, or kind of like a fulfilling experience with the client?
Yeah, I mean, I've had so many of them, right? I think for me, like, for instance, just one, like first-time home buyers are awesome because they go into it usually like, hey, I don't know if I can do this, man. And if you just guide them in the right direction, they're going to love it. They're just going to, if you answer some, what I call simple questions, maybe they're complex questions to them, but to me, it's very simple, and just guiding them to the finish line, they're usually the most grateful people ever, and they will refer their entire family to you at that point. I think I had a lady last year who, it was a divorce situation, and her ex-husband was like, hey, you're never going to be able to do anything without me. It was very much demeaning. She never bought a house. She'd been at her job for probably a little over a year. It was kind of a tougher deal, and we got her to the closing table, and I don't think there was a dry eye in the whole house. It was very much like this girl came over, like a divorce where the husband was pretty rough on her, very much like she didn't think she could get away from him, to put things lightly. And when she did close on the house and she did get to break away from him, that was probably one of the most rewarding ones, just because you pulled somebody from a really bad situation and did something they didn't think was physically possible. I probably have 100 other stories I could tell you, but it's just seeing people, purchase a home is way more than what it sounds like on paper, because you're in it with them. Like from day one, you're in it. And then when you get to that closing table, it's sometimes bittersweet because you're like, dang, I don't get to talk to these people as much anymore. Like I've had some clients where I'm like, dude, I love hanging out with you and like chatting with you, and now you're going to be like, see ya. That sucks.
Yeah.
Good for you. And I'm happy for you. But I don't know. I think staying friends with clients too afterwards, like never a bad idea. I actually hang out with some of my clients now. Like they were super cool. And I'm like, all right, cool. So to longly answer your question, just the fulfillment of it all is just the best.
Yeah. Well, and so on the flip side of that, what does a bad experience look like with a client?
Bad experiences, I guess, like they don't want to work around the things you need. If they don't want to give you documents, they're very much like dragging their feet. You're pulling them headfirst through the whole process. Like they just don't want to cooperate. Those ones are tough. And, I still love every client I have. It's just there's a personality type sometimes where, hey, I don't want to do any of this. I want you to do it for me. And while that's not always my favorite thing to do, I'm going to figure out a way to make sure we get what we need. So I would say I don't have a lot of like bad experiences, but at the same time, like clients that don't want to cooperate can be pretty difficult.
What do you think the source of like that not being willing to cooperate with you is? Like, because it's kind of if you're trying to buy a house and like all these things need to be done, like why not just do like where does the hesitation come from?
The hesitation comes from them being worried, I would say. Because a lot of people are like, well, why do you need my social security number? Why do you need my bank statements? Why do you need to know all this stuff about me? And I think the personality type that I see the most that does this, they're very, maybe introverted. They're very nervous. And I don't get this a whole lot. Like I get like, yeah, occasionally you have the client that doesn't want to send you stuff. They get kind of like pushy and they're like, hey, I'm not comfortable giving you my social security, or I'm not comfortable telling you like what's in my bank account. It's usually because they're just nervous. And for me, what I like to do is just make sure that they're fully comfortable before I start asking these things. Like some other loan officers are just like, hey, I need this, 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 and this. And if they push back, like, they might handle it differently than I do. I like to do introductory calls and say, hey, this up front is what we're going to need. Is this going to be a problem? And 99% of the time they just say, no, not a problem. But it stems from the fear of it all, of like, hey, I don't like giving my personal information out. So
interesting. Makes a lot of sense. Because there are a lot of ups and downs and a lot of different dynamics to be able to handle. But I feel like if somebody's working with you and they trust you and you kind of have that, you set those expectations up ahead of time.
Yeah.
Waiting through those things are a lot easier. So like, how have you you said you do that initial call, that initial meeting, but what are some other ways that you set those expectations?
Yeah. You just tell them what they need to expect. And when I first started, I wasn't really doing that. When I first started, it was very much like, hey guys, my underwriter is going to ask for this. And I just wasn't super confident in myself at first, but now I'm like, hey, you're going to expect this, 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 and this. Is that going to be a problem? And if they say yes, it's like, okay, well, why is that a problem? And you kind of just figure out like where their pain points are and you work around it. Because some people are very much like, hey, here you go, here's everything. But then there's some people that are like, yeah, I don't want you to know that maybe I overdrafted on an account, or like, I don't want you to see this. And what I tell them up front is, hey, if you don't tell me the truth, I'm going to find out regardless. And you don't want to find out, a week before closing. So if you tell me now, I'm not going to judge you. I don't care. Like at the end of the day, I want to find out, and I'm going to be way more upset if I find out, the Thursday before closing than I'm going to be if you just tell me up front. So having the open door policy with all my clients has always been my thing. And building that trust up front to say, hey, maybe I did overdraft, tell me about it. Or maybe, hey, I missed a payment on X date, I'm going to find out regardless, just tell me about it. So I'm very heavy on the open door policy. Call me, text me, you got a problem. I'm going to be the solution instead of hiding the problem from me and then, we're scrambling.
What are some of those things that can make a deal fall apart?
So many things. Don't quit your job. Don't buy a car. Don't take out a new credit. I could name 20 other things, but, spending all your money at the casino before, bringing your cash to close. Yeah. There's so many things. It's just making sure that you have a structure with them and be like, hey, you cannot do X, Y, and Z before closing. And people will still do it. I mean, it's human nature sometimes to switch jobs in the middle of closing. You shouldn't. I've said it a million times, but don't switch jobs. Don't buy a car. People will still do it. You have to make sure you are able to navigate it. And sometimes you can't. Sometimes that deal will fall apart because somebody did something you told them not to. And at the end of the day, it's not your fault because you warned them and said, hey, like my introductory email with my assistant and I is literally in red. It says, please see like this section and it goes off of anything that can throw the whole file off. And in the introductory call, we go over it as well. So sometimes it happens. Sometimes people don't listen to you. And at the end of the day, that's not exactly your fault.
It's not all on you.
People might point fingers at you, but
Yeah.
I mean, hey, if a client buys a car, you're not going to probably close.
Can you give me an example of like, okay, so a client did buy a car like 2 weeks before closing. What are some ways that you've learned to get things back on track?
Yeah, it depends where they are financially usually. So say that I had a client last year who bought a car pretty close to our closing date, and their debt ratio was pretty low, right? Like it was pretty insignificant, right? Like they were very financially stable. That wasn't a big deal because it's like, hey, yeah, you bought a new car, but your debt isn't super high. We can work around it. But there's the caveat to that of, hey, maybe your debt ratio is pretty high and you just went out and bought a Ford Raptor or something. You bought a big truck, or you bought, a Cybertruck or a Tesla or whatever it may be. You went a little crazy, right? Instead of buying a Honda Civic or something. Then you get screwed. I mean, if your debt is too high, at the end of the day, there's no fixing it at all. So there's workarounds with it. I usually just tell people that there isn't, so that they don't do it. But the very rare cases, I've lost one deal ever because somebody bought a car, and it was because it just pushed their debt way too high. Also,
so like common sense, but I guess if you don't think about it, you don't think about it.
Some people don't think about it. Also, the furniture appliance stores, man, they always, here's a fun fact. They always tell you that, hey, we're not going to hurt your credit. We're not going to touch your credit. They do. Like the Afterpays and the Affirms and the, hey, you're not going to get charged for a month. You can maybe buy this furniture on Affirm. Maybe we won't catch it. We're going to catch it. So I've had clients that have kind of fallen for that. Like they want to have all this furniture prepped before they go and like move in. And I've always been able to work around it, but it does get tricky if their debt ratios are high. So
what keeps you going like during all of that messiness of like, because each transaction, like you said, is different.
Yeah.
It's like when the heat starts to rise, what like keeps you going?
I think I just do everything with good intentions, right? So every file is different, and yeah, heat can rise, man. I mean, things can go off the rails. It's just how you keep your mental state. And admittedly, there's been deals where I've been in a bad mental state, just trying to save it, and I'm doing everything I can, just trying my best to keep it alive. And every loan officer ever, if any loan officer said they've never done this, they're lying. But you grind yourself so hard at times, and you'll do anything it takes to make a deal work. And that's what keeps me going, is the grind of it all, of like, dude, I got super creative on this one deal and I got it to close, and nobody else could do it. And we got it done because of, having the knowledge to get it done and having the team to get it done. That's kind of what keeps me going. In the larger scheme of things, I think it's the financial stability of it all, of, hey, if I can make this work, I could, send my son to, college maybe, or give him the life that maybe I didn't have. And, my wife's going to be thrilled if we can continue to keep leveling up and keep, paying off debts. Or, I mean, we're at a spot right now where we have very minimal debt, and we've kind of always been smart financially. Kind of a nerdy numbers guy, I guess, that comes with the mortgage, job. But, yeah. Don't know if that answered your question.
No, it answers it perfectly. I mean, that's what keeps you going. Like, I think this industry it's obviously competitive, but there's a lot of times where it's very unforgiving. And if you don't have that, if you don't have that passion or just that like thing that grounds you, it can be very easy to just get so discouraged and upset.
You say discouraged. Yeah. It's so easy to get that dark cloud, man. I mean, I've been there. Admittedly, like I think everybody that's ever done a sales job, whether it's mortgage or insurance, or, I mean, there's so many sales jobs out there where you're like, dang, my buddy down the street is, killing it, crushing it. I'm just not doing it. It's not usually a you problem, right? It's just maybe that month wasn't your month, right? Maybe, you should just stop comparing yourself. One, I do that all the time, still do it. I'm not going to lie about it, but the keeping it going is probably the hardest part of all of it, because it's so easy to give up, right? It's so easy to be like, I don't want to do this. And when you're in sales, you could kind of walk away at any time. You're just like, hey, I could go get a 9 to 5. I could go on Indeed and do this. But why would I when I have all the freedom in the world to continue to do nothing but grow? So I think when you look at the bigger picture of it all, that also can keep you going, of like, hey, I have no limitations here. I don't have to clock in. I don't have to, clock out. I don't have to be limited to a 1 hour lunch break, right? Yeah, do I work 7 days a week now instead of 5? Yeah. Mm-hmm. But the limits are endless and you have nothing but room to grow. So that's also a huge factor in keeping it going.
How have you managed your expectations in that?
Ooh. I think at first I was so ready to just crush it, right? My expectations were extremely high and I got humbled quickly. I realized it was way easier to fail than it was to succeed. So my expectations going into it, year one, was stupid high. Like I was just like, it's me versus everybody. I can do this. Like this is gonna be easy. And that was the worst mentality I could have ever had. Now where it's at is like, my expectations, I want to do, 1 or 2 more a month. I'm not trying to go out there and hustle myself to death, and just continue to grow and get smarter and create a better experience and the best experience for every client at this point. It's not as huge as it used to be, I guess.
What kind of person would you tell not to do this?
I would tell everybody and their cousin to do it, but there's a slight few people where I'm like, hey, if you don't want to pick up the phone and you don't like to be on the phone, or if you can't communicate, you're probably not going to love this. But if they come to me and they're like, hey, I want to do this, I'm never going to tell them not to. Sky's the limit for anybody. I've seen different personality types in this industry so many times where there's people that I'd rather watch paint dry than listen to talk, but they kill it, dude. Like I've met a few people where I'm like, there's no way that guy's producing 5 times as much as me, and he's the most boring person on the planet. Honestly, some of the best loan officers I know are very boring people, and that's okay. So I wouldn't discourage anybody. It's the most fun, awesome, amazing industry, but it does have its, kind of side effects, I guess, maybe not the right term, but there's a lot of stress. It's the most stressful thing I've ever done in my life, but it's the most rewarding thing I've ever done in my life. So I don't know. I wouldn't really discourage anybody not to do it, unless if you hate people and constantly, being on the phone, I guess.
So what would failure look like in this type of position?
I mean, that's a tough one, man. I think failure is just not doing anything. Continuing to know that you don't have a 9 to 5, or continuing to know that you don't have stability and just doing nothing. That's where you start to fail. And most loan officers have probably been there where you're like, I'm not doing enough, but you're also doing everything at the same time. What I'm talking about is like the people that are like, yeah, I don't have to clock in. I'm just going to, stay home and play video games and, do whatever I want to do and not pick up the phone. I think that would be where failure starts to really kick in. And that's where people get weeded out. The people that can't structure their life around it, or at least, create an environment where they're growing. If you're not growing, you're dead, right? Mm-hmm. And I've seen it quite a few times where people get their license. They're going to just, hey, I'm maybe going to do this part-time, or maybe I'm going to do it here and there, but I don't have a fallback, or I don't have another job. I'm just going to kind of jump into it that's usually where you start to see the failure come, where you're not constantly keeping up. But then there's the other side of it. Some people look at, smaller producers that do, 1, 2, 3 loans a month. And some of these bigger producers maybe think that's failure, right? There's different levels to it. And where I look at it is maybe that person that closes 1 or 2 a month is financially stable and they don't want to do more. And that's okay. So I guess that question is a little subjective. For me, just doing nothing, just wasting your life and just staying in bed, doing no calls, no follow-ups, just not staying on top of things. That's when the failure kicks in.
Can you walk us through kind of that structure that you've built that you like currently use and how you like came to that structure?
Yeah, my structure is kind of just never turning it off. And again, I know that's what I said earlier about not doing. Yeah, I know. But mine is just the open door policy of it all. Of, hey, I know that X, Y, Z files are all going to be different. Every single thing is going to be different. My structure is just continuing to keep myself educated and constantly being on go to know that, hey, if this file goes south, how am I going to fix it? If I have the knowledge to fix it, I'm going to be able to. Like I said earlier too, my day-to-day is different every day. Yes, I have my meetings scheduled. I have my events scheduled. I have everything scheduled. But all it takes is one phone call of, hey, this appraisal needs work done, or hey, this person spent all their money at the casino and now they have no money to close. Or all it takes is one of those calls where it's like, oh, by the way, you thought we were closing tomorrow, or oh, by the way, this came up. So I'm very structured with no structure, if that makes sense. Because the mortgage world, the real estate world is, you never know what's going to happen. You're always going to be getting a call of like, hey, homie bought a car in the middle of the transaction, or hey, somebody just took a pay cut at their job, or hey, someone quit their job. There's always those things. So structuring yourself in a spot where you kind of just expect something to happen on every file, because every file could have something that could happen. And when you're prepared for it and nothing happens, it's perfect. So I don't know if that answers your question, but yeah.
I mean, it's your experience and that's kind of what you built. And like you said, like everyone's going to do it differently.
Sure.
But you just got to find what works for you. And it sounds like you have found something that works for you. You're sweet.
It works. Yeah, for sure. There's days where I'm like, dang, this is tough, man. But there's days where it's like the best ever. So that's with any sales job.
Yeah. Oh yeah. Just got to take it as it comes.
Yeah.
So last question.
Sure.
So say somebody is at a career crossroads. Either they're just graduated high school, just graduated college, or has been like let go from their job, or is just looking for something new. What would you say is the next step to get into this job field?
The next step is just figure out what it takes to get in, right? And maybe this podcast will reach somebody that's like in that crossroads, right? The number one thing I could recommend doing is figuring out how to get in and how to take that test and find a company that's willing to pay for it if you don't have the means to. Or, it's like you just alluded to, maybe they just got out of high school and they're like, what do I do? Because, when you're in kindergarten, first grade, going through school in general, school does everything to prep you for college, right? Mm-hmm. But not everybody's built for college, man. Like I'm never going. I never did. So like, I was at that crossroads, right? I started at Rough when I was 19 years old, and I didn't mean to start in this industry, and I fell in love with it. But for somebody who's actually, looking at it and saying, hey, this looks interesting, educate yourself, watch the videos of, people that do it, and watch reputable sources of just like, this is what it takes to do this, and figure out mentally, is it worth it for you? Is it worth maybe not getting paid for 6 months? Do you have the means to do that? Or, hey, maybe you live with, let's say, family, right? Like a kid right out of high school potentially lives with their family still. If you say, hey, mom, I'm going to take this test, I'm going to become a loan officer, can you basically support me until I hit, maybe 6 months? If I don't close anything, kick me out, I'll go figure out something else to do. I think that's really smart to do if you have that sort of, family help. somebody who maybe just graduated college, or maybe someone's 30 or they're 40 or they're 50 and they're like, man, I kind of just want to see what this is about. Go for it. Figure out the easiest way to take that test. Figure out if you want to take it and pay for it yourself, and then find, a company to sponsor you and like employ you. Or if, you want to go on Indeed and find someone that's hiring for it and take the test through them and have them pay for it. But you don't need a college degree. And I think that's something that really enticed me. I never wanted to go to college. It wasn't for me. I admittedly barely made it through high school. I just didn't want to be there. I knew there was more to life than just being in school. And I think this will probably resonate with a lot of people that are in sales of like, yeah, I'm not the most book smart person in the world, but my street smarts are high. And I think my number one advice to somebody who wants to just try it is you're going to want to go all in if you can. And if you have this, like I just alluded to with the family, if you have the support to go all in, you're probably going to be way more successful than somebody who's got $0 in their bank account and is like, I think I'm going to try maybe doing like mortgage lending, maybe. Because if you're 1 foot in, it's going to be really tough for you. So I don't know if that answered your question well, but at the same time, I could go on for a while on the do's and don'ts of it all.
Yeah. No, I think that was perfect. I appreciate it.
Cool. What else you got for me? Nothing.
That's pretty much it. Yeah. Those are all my questions. I think we talked about a lot of the different roads and the different paths that you can take and like what it looks like to succeed and what the practical steps are to get there. So I think that was great. I appreciate it.
Cool. Well, thanks for having me.
Yeah, dude, for sure. Thank you, John.
Of course.